Hi, everyone. Thanks for tuning in to episode 8 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing with ALN Apartment Data, and I'm here with the star of the show, Jordan Brooks. Jordan, how are you?
I'm great, Patrick. Hard to believe we're already on episode 8.
It is hard to believe. It's episode 8. It's March. It's beautiful outside. We made it through the blizzard of Texas. So we're doing all right. We survived. Well, this month, your newsletter article you wrote was called Tracking Recent Apartment Demand Changes. And you cover quite a bit concerning national and more granular performance as well as price class demand. And it seems like there's some good news in your article, or as you put it, some positive momentum. So let's start with some national numbers and the types of momentum that you found there.
So at the national level, apartment demand really started recovering around mid-year last year, sort of the start of the third quarter. And that continued through the fourth quarter. We saw, typically our industry is pretty seasonal, and the fourth quarter softens a bit. That wasn't really the case in 2020. And then that momentum has continued over into the new year at the national level. And so just for January and February, net absorption is about 30% higher than January and February coming into 2020. And so, it's been a positive development for sure. And then looking back even in 2020, in the first half of the year, we were down about 60% in terms of demand. And then in the second half of the year, we were up 75% compared to that same portion in 2019. And so, like I said, we really saw a resurgence starting in the latter part of 2020. And then the good news is that has continued into 2021.
There were several markets that got shout outs in your article for their demand increases and some that didn't really fare as well. What would you like to add for us or spotlight from your article or just your research?
Well, yeah. So, the first thing we did in the newsletter was go through some price class differences, and then we got into some specific markets. And we'll be spending a little bit more time on some of this as well at the blog in upcoming posts. But yeah, I mean, really, the difference was we're still seeing kind of the expensive coastal markets like Seattle, San Francisco, New York, Washington, D.C., Boston, those type of markets, still kind of struggling. We've not really seen demand pick back up in those areas. Whereas in markets kind of across the Mountain West and through the South, Dallas, Atlanta, Phoenix, Denver, those type of areas, it's been actually really good. And for the most part, the last 6 months, the last 8 months, and specifically even the last 2 months in this new year, have all performed better than their counterparts in the previous year, just in terms of net absorption. So, as the new construction pipeline has remained active pretty much across the country, in a lot of these markets, we've seen a real resurgence in demand to the point where, we're 100% or more over the same period a year ago when we're just looking at the net change in rented units. So it's been really positive for really a lot of markets, and it's not just the large markets either. I mean, one of the aspects I didn't have time to go through in the newsletter, trying to keep it a reasonable length, was really how widespread this demand recovery has been. If we look at markets of different sizes, even into kind of the secondary and tertiary markets, and it's also been widespread geographically. There are some outliers like New York kind of brings its whole NAA region 2 kind of brings that region's average down. But for the most part, across markets of different sizes and across the country, we have seen a pretty good demand recovery. And then of course, within that, there's some particular markets that have fared especially well.
Well, you've recently hosted and spoken to groups and associations in Houston and Los Angeles and more just this year already, and it's only March. You got a very busy schedule coming up very soon. What areas of the country will you be speaking with next, and what's on your content calendar coming up?
It has been busy, and it's only going to continue getting busier. So coming up, I've got Delaware, where I'm going to be speaking, Wilmington, North Carolina, Augusta, Georgia, Ohio, Dallas, Fort Worth, and a little bit after that in May, I believe I'll be in Orlando for an event. So a lot of events coming up. Most of them, digital, and so viewers of this can be on the lookout on our social media for details and registering if those are areas of interest for them. And then in terms of content coming up on the blog, we're going to be doing a part 2 of looking at some particular markets where the population growth has been especially strong in the last few years. We did a recent post where we were looking kind of at the larger markets where that's been the case. This one's going to be a focus on some of the more secondary markets and those areas that have seen strong growth. And then we're also going to be going through, as I mentioned in this newsletter, some more detail on where exactly the demand has been recovering best and quickest. So we're going to be looking at different regions, different market sizes, and then profiling some specific markets.
And you can find all of that and more at our blog at alandata.com/blog. And we do announce all of these articles and post links out to them on our social media channels. You can find us on Twitter at ALN Data. You can also just search Facebook and LinkedIn for ALN Apartment Data. You should be able to find us there. You can subscribe to our YouTube channel. That little button just came up. Click that subscribe button. That way you don't ever miss any of our videos. And Jordan, I want to thank you so much for taking time out of your busy schedule to speak with me on this, and look forward to next month's article and conversation with you.
Thanks, Patrick. See you then.
Bye.